Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are fortunate to have as our guest Mr. Tom Dunkel. Tom Dunkel is Chief Investment Officer at Bellrose Storage Group. He has over 27 years of experience in finance and investing and in real estate. This man knows how to lead teams of people to get things done. We look forward to speaking with him about all of those things today. Ladies and gentlemen, please join me in welcoming our guest, Mr. Tom Dunkel. Welcome, Tom.
Hey, Ray. Thanks, buddy. It's so good to be with you and all the listeners. I'm really looking forward to our chat today.
Yes. So are we. Grateful to have you here. And to kick things off, when we do our research on all of our guests, we like to look at your profiles, your LinkedIn, Instagram, all of that stuff, just to see what's going on out there. And you had something very interesting on your LinkedIn profile. Your tagline there is, since 2006, helping miserable landlords regain their freedom by investing passively. Can you unpack that for us, please?
Sure. Yeah. So that's a trap that I fell into years ago, Ray, was thinking, I could get to a place of financial freedom and time freedom by acquiring a portfolio of residential rental units. And I know there are some people out there who have successfully done that, and congrats to them. But my experience was pretty bad. I got into real estate in 2006. Little did I know right around the corner was going to be the Great Recession. So even though I was doing some fix and flips and doing some wholesaling and acquiring some rental properties, and as a finance guy, I'm looking at the numbers, how the cash flow should be flowing off of these rental properties. And I just never was able to hit those numbers. There's always some repair or some tax from the city or some fee from the municipality that just chipped away at my cash flow. And so what ended up happening was I'm working hard to try to solve these problems and working with my property manager, and I'm not making any money, but I'm working hard, right?
Right.
So I became a miserable landlord, and I figured, hey, there's got to be a better way to play this game. And so I was able to transition into some other asset classes, which we can talk more about later. But because of that experience, Ray, I just have kind of made it my mission to help guys like me, investors like me, who fell into this trap of thinking, we could create this great life for ourselves through residential real estate and actively managing stuff. And but it's just not true. So I'm glad to have some investors that have joined us at Bellrose Storage Group who are in that transition. They're in that transition from an active investor. They've got some rental properties and they have seen the light.
Yes.
And they are starting to liquidate their portfolio, and they are placing those funds, those proceeds from those sales with Bellrose Storage Group in our syndications. And so they're investing in our self-storage properties with us, and they're transitioning from being active and working hard for little money to being a passive investor where they have now the time freedom and the cash flow is really good and they don't have to do anything. So that's why I get a lot of fulfillment, Ray, out of helping those people make that transition from active to passive.
That is a remarkable niche. You're a magnet for anyone who wants to liquidate a portfolio. They've been working at it. Like you say in your LinkedIn profile, they're miserable right now. They want to liquidate that. And anyone who's ready to do a 1031 into one of your deals, I imagine you do a lot of 1031 exchanges.
We do a handful. We're looking to do more. For sure, but it is part of the service that we're able to offer is to help those investors defer those capital gains taxes by doing the 1031 exchange into one of our storage facility deals. Absolutely.
Yes, I like that. I like that.
Yeah.
So what asset class were you in 2006 that motivated this shift?
Sure. So yeah, I was doing residential fix and flips
Hmm.
and that sort of thing, and picking up residential rental properties from like 2006 to 2008, 9, and then the world changed quite a bit.
Yes.
And through that process, and just not having a great experience as a landlord, I discovered distressed mortgage debt. So I started buying distressed mortgage debt in 2009. 2010, I connected with my partner Joe Downs, and
Hmm.
we've built up a company called U.S. Mortgage Resolution over the last 14 years. That's now done over $57 million of revenue in the distressed mortgage debt space. So we've built a nice little company there, which has allowed us to get involved in some other asset classes. Because the thing with distressed mortgage debt, it can be super profitable, but it's also very unpredictable and very
Mm.
volatile.
Hmm.
So as a business school guy, wanting to do the business plans and track the key performance indicators, the KPIs and all that stuff, it was just really challenging in distressed debt. And so we felt like that business, honestly, it could go away or shift dramatically without a
Hmm.
lot of control on our part. So we were looking for other asset classes where we would have more control, some more predictability, some more sustainability as a business. And so we dabbled in hard money lending. We were doing some
Hmm.
hard money lending. We actually did do some additional residential fix and flips, which did not go well.
Hmm.
And we were partners in a title company for a little while, but eventually around 2016, 2017, 2018, we started hearing more and more about self-storage. And it
Hmm.
really started to check a lot of the boxes we were looking for, which was, a steady asset class, a cash flowing asset class, tax advantages, future growth potential. And so the more we started learning about self storage, the more we liked. I mean, there's, I could go on and on with the list
Hmm.
of things that we like about self storage, but we were so excited about it. We started going to all the conferences and such in 2018, to get educated, started surrounding ourselves with smart people who are already in self-storage. 2019, we joined a self-storage mastermind group where we really learned, Ray, that, even though Joe and I, we're pretty good finance guys, we can raise capital, we can close deals, but we found out that we had two pretty glaring holes in our skill set. The first one was we struggled to find off-market deals, which everyone out
Mm.
there who's in real estate knows. The off-market deals are really where you find the best opportunities.
Yep.
And as everyone has probably heard in real estate, you make your money when you buy, right?
Yes. Yeah.
So we struggled to find those off-market deals. So through our mastermind community, we were able to connect with a guy named Tim Kane, who he had the opposite problem we had. He was generating all these off-marget leads, but he's not really a
Mm.
finance or a deal guy. And so so it was just a great fit, right? And
Yes.
plus he's just a great guy and a funny guy. And so we got along on a personal level, but then we
Mm.
also helped each other's round out our skill sets. So now we could find the deals, underwrite the deals, get them financed and closed. But now, Ray, now we got to learn how to run the thing, right? Right. So
Yes.
also through our mastermind community, we're able to find an operations expert that had run many facilities around the country. So we were able to engage with her, and she was able to bring on her skills and her team to help us now, run the facilities that we were able to take down. And so that gave us now the ability to confidently go out to market and acquire our first facility in 2020.
Hmm.
And now we've acquired, well, next week will be our 18th facility across 8 states. And so, going on $50 million worth of acquired value, uh, 3,000 units, that sort of thing. So we've been able to build a nice team and really execute on our business plan in a great asset class.
I love the way you laid that out. In 2006, you were doing fix and flips, and
Mm-hmm.
you didn't have time for any level of sanity or life. There was a lot of work involved in that,
Mhm.
and you weren't making the kind of money you wanted to make. Global financial crisis hit, which caused everyone to look around differently. And
Mhm.
I would bet that it may have created some opportunities for you. You started the distressed mortgage business, and you were running that for a number of years. And
Mhm.
then move beyond that, you were looking at other opportunities. You found self-storage around 2016, 2018, right
Mhm.
around there.
Yep.
And it clicked a lot of the boxes that you were looking for. But in the middle of that, you knew that
Mhm.
you and your partner were very good deal guys. You knew how to raise money, you knew how to structure deals
Mhm.
and put them together.
Yep.
But the what would you call it? The flow of deals wasn't adequate for what you were capable of handling. And then at one of
Mhm.
your conferences, you met somebody, you clicked on a personal and a professional level. He
Mhm.
was a guy who had a bunch of deals, but did not have the expertise to get the deals done or to get them financed. You had the ability to get them done and get them financed. We pulled that together. So that's that part of your who not how. You know, we're
That's right.
fans of that book, right? Part of your who not how. And then
Absolutely.
now that you've caught all of these deals into your company, you had to run them, and you found someone who is very good with asset management, and she is knocking that out of the
Mhm.
park for you.
Mhm.
So you've solved all the problems. I
Mhm.
bet day to day you have absolutely no problems as an entrepreneur, and it's everything smells like potpourri.
That's right. Yeah, yeah, yeah. No problem. No problems whatsoever, Ray.
Yes.
No, every day is a new challenge, a new problem, and of course, we do the best we can to control what we can control, which is, we can control the lead, generation coming into the funnel. We can control the investor conversations we're having. We can control the facility level operations best we can, but obviously there's certain things that are out of our control, like interest
Yeah.
rates, going from 3% to 8% last year, really kind
Mm.
of threw a wrench into the market,
Oh
and
yeah.
created a lot of turmoil. So of course we didn't have any control over that. We just have to kind of battle and fight and manage our way through that. So,
Mm-hmm.
and then of course, there's always the human element. We've had to make some changes to the team, let some people go, hire some new
Mm.
people. So, there's always those kinds of things as a business owner, that you have to deal with. But it's all part of the deal, when you're an entrepreneur and building businesses. I mean, those are all the things you've got to handle.
Absolutely. Is there a certain part of the country that you like when you're acquiring the self-storage facilities?
Yeah, so we're based in the East Coast.
Mm-hmm.
Joe and I are outside Philadelphia. Tim's in the Washington D.C. area, so we
Mm-hmm.
we kind of have a general better feel for the markets in on the East Coast. So,
Mm-hmm.
and then combine that with the fact that much like in the multifamily industry, we follow the demographic trends, right? So people, generally speaking, are moving out of the Northeast and they're heading to the South and the Southeast. So that's why our portfolio generally spans from Maryland to Florida, and then we've got
Mm.
one in Kentucky, and we're starting to look at some things in the Midwest as well. But I tell you one thing, and it's unique to storage and different from multifamily, is as you start to get south, Ray, uh, there's no basements, right? The soil
Oh,
down
yeah,
there gets
yes.
very, very sandy, and
Mm-hmm.
so there's no basements, and it's too hot to go in the attic, right?
Mm-hmm.
So people are generally looking for, that creates some demand for
Oh,
self-storage outside of the house, because they don't have a basement to throw all their extra stuff into, or an attic
sure.
that is manageable. So
Climate-driven demand.
climate-driven demand. Yeah, well said. Climate-driven demand, and then also, population-driven demand. A lot of
Mm-hmm.
the areas in the southeast, Georgia and Florida, the Carolinas, etc. They have their populations are increasing.
Right.
So we like to see that, as we're because that's of course a big demand driver for storage, is not just the climate and the
Right.
geography, the topography, but also just the population growth.
Okay.
People who are moving and transitioning, and that creates a need for self storage.
Are you doing any conversions? I look around and of course you see this and you see the numbers, the mortgage numbers related to this too. I see a lot of office buildings that are vacant. And I'm thinking, what can be converted to? I'm thinking apartments maybe, but maybe not, because a lot of apartments, the power and the water and the sewage distribution isn't ideal for putting apartments in there, because it's all in
Right.
the center where the elevators are, where the elevator shafts are. But for
That's right.
storage, that could work. That's my thought, that it could work for storage. But I don't know. Do you do any conversions? Any, what would they call that? Adaptive reuse?
Yeah, I was gonna say that's the fancy term for that, is adaptive reuse.
Yeah.
We're doing a little bit of that, Ray, and I know there are other players in self storage who are doing a lot more of that. We did a small conversion at a property we acquired about a year and a half ago. It was traditional self storage, but it also had a large warehouse building that was just
Mm-hmm.
full of junk. And so what we did is we cleared out all the old junk, and we worked with a storage construction company to help us add units inside that warehouse. So
Oh
we were able
yes.
to adaptively reuse that space and turn it into additional self-storage units, which are, they're inside, so they're going to be climate controlled down in Georgia, which people like
Yeah.
because, of course, it's pretty warm down there. So
Mm-hmm.
we've been doing a little bit of that. And actually, we touched on wholesaling earlier, right? Right. Well, you can wholesale in self-storage as well, because a couple years ago we got a lead on a deal in Ohio. It was an old Sears
Mm-hmm.
that went out of business. And
Mm.
so at the time, we were still a pretty new company, and we didn't really want to take on a big project like that. But we had this opportunity that we were able to wholesale to another company. So we made a nice fee on it, and then they took it and ran with it and did an adaptive reuse of an old Sears and built it out inside into a new self-storage facility. So pretty
Yeah.
cool.
There's a lot of those around the country. A lot of old Sears buildings. So yeah, a lot
Sure.
of opportunity.
Sears, Kmart, yep. A lot of old, Best Buys, a lot of those big boxes, yeah, have become vacant. Yeah, so there's opportunity there for sure, and as well as in the office space. In fact, that was one of the first deals we tried to do way back when, Ray, was convert part of an office building outside of Philly where we are into storage, because it had like almost a flex space
Mm-hmm.
area to it, and so there was already a little bit of more of an industrial feel than a full-on office feel
Yeah.
to the property. But the township shot us down when we came in
What
with our plan to change that out into a climate controlled self storage facility.
what was their argument? I'm always curious about why municipalities shoot down developers sometimes. What were they
Yeah,
thinking?
so it's funny, I guess, going into this business, I guess we thought about it a little bit, but it really has become a barrier to entry, which, when you own a facility in a particular municipality, it's a good thing, because
Mm-hmm.
municipalities, they're not big fans of storage. There's not a lot of taxes that generated out of a
Wow.
self-storage facility, because it's, especially with our model, is we do what's called a hybrid management model. So, typically if there's a bunch of employees in an office building, in some municipalities, they're getting hit with a small local income tax or something like that. So if there's only one or no employees running the self-storage facility, then the municipality isn't getting their tax revenue, and of course they don't like that. And then, for traditional outdoor drive up type storage, it's not the most attractive kind of property. So a lot of
Mm-hmm.
municipalities don't like to give out permits to build storage. So
Mm.
so it kind of suppresses the supply, but as populations grow, it increases the demand. And so we like to see that supply and demand imbalance in the markets where we enter.
Sure. Okay. Now, given their pushback on storage for the reasons you mentioned, would you look at other asset classes, or do you have are you focused on storage?
Yeah, we're just focused on storage. We have a couple niches within the self-storage niche
Mm-hmm.
that we're really excited about. One is RV and boat storage. So talk about
Mm.
supply and demand imbalance, right? So you've got all these new home developments that are being built in these growing areas, but
Mm-hmm.
a lot of them have homeowners associations, right? HOAs, and guess what? HOA doesn't want an RV or a boat parked in the neighborhood, right?
Right.
So so now what? Well, there's hundreds of thousands of RVs built and sold every year.
Mm-hmm.
Obviously it ebbs and flows with the economy, but it's a very, very popular kind of recreation, right?
Mm-hmm.
For a lot of people. But now they're buying the vehicle, but there's only about 20,000 parking places being built every year. So we have like a 10x disparity in the number of parking places being built versus the number of RVs being built. And so we have some facilities that are RV and boat where we have customers that'll drive an hour to park their vehicle with us because
Wow.
we're the closest one that's at a reasonable rate
Mm-hmm.
that works for them. So there's a lot of that going on in the country. And so that's a niche that we're really looking to get involved in further. And then the other one that's exciting is what we call pro storage, which is for professionals. So it's for
Mm-hmm.
contractors, landscapers,
Yes.
carpenters, electricians, plumbers, right? So these guys are getting squeezed out of flex spaces that might be, 20, 30,000 square feet because you got the Amazons and the last mile distributors of the world
Mm.
gobbling up all of those types of spaces. So they're pushing up the rental rates on those spaces and pushing out these small contractors. So we acquired a facility in Wilmington, North Carolina
Mm-hmm.
last year, and where the instead of the units being a traditional kind of 10 by 10 unit with an 8-foot roll up door, these were like 18 by 25 units with a 14-foot roll up door and a
Yeah.
20-foot ceiling, so they could pull a vehicle in there, a work truck, a van, what have you, and store their equipment. So these contractors are getting squeezed out of these flex spaces that are being taken over by the Amazons of the world and these last mile distributors.
Mm.
And so they need a place to go because they're too big to go back home. And the wife wouldn't be too happy if they brought the company back into the garage or the basement
Yeah.
at home, right?
Yes.
So they
Yeah.
need a place. So and a couple other factors are number one is with interest rates going up, a lot of people are staying put at home, right? So a lot of people are saying, well, if we're going to be staying here, we need to upgrade the kitchen, we need to upgrade the bathroom, we need to do the
Mm-hmm.
paint and the carpet or whatever. So contractors are, very much in demand,
Mm-hmm.
but they need a place to run their business. So we're excited about that niche, and again, there's a big supply and demand uh, imbalance there because we're experiencing that in our facility in Wilmington, North Carolina, where one of our contractors moves out. We fill that facility, that unit back up in a matter of days or maybe a week, uh,
Wow.
be, because they're that much in demand.
Big demand. You know what's really fascinating about that? You mentioned how Amazon has pushed many of these contractors, electricians, plumbers, what have you, out of whatever flex space they were in before. I think of Amazon as displacing retailers. I don't think of them displacing a business owner in an industrial space. I had not
Sure.
considered that angle before, but of course, yeah.
Yeah. Yeah, well, I
Uh,
mean, if you want to get your little blow up swimming pool, why do you think it shows up in one day? You know, it's because they have these last mile facilities, popping up all over the place, and
Yes.
that's how they're able to get you your vitamins or whatever, in this on the same day.
That is remarkable. Yeah, out here in Arizona where I am, if you throw a rock, you will hit an Amazon distribution facility. So that's the
Hmm.
way it is out here.
Yeah.
Wonderful.
Yeah. Yeah.
We're coming towards the end of our time together. This is so quick. I could ask you more questions about this. And I like
Sure.
one that you're in a very tight niche. There's something Charlie Munger used to say, if you're going to choose a niche, let it be small and tightly defined and not large and fuzzy. If it's small and tightly defined, you can really, just blow up in a good way and excel. And I
That's
see
right.
that in you and what you're doing here. So that's exciting to hear about that. As
For
we
sure.
wrap up, tell us, what are you reading right now? Or what are you listening to right now? What do you do to sharpen your brain?
Yeah, wow, that's a great question because there's so much information out there, but it's definitely important to stay on top of things. So I do listen to some podcasts. Of course, our friend and mentor Hunter Thompson has a great
Yes,
podcast, Cash Flow Connections. I started
yes.
listening to to an economist named Logan Madashami, and because he has a lot of great insight into like the residential mortgage world, and where interest rates might be going and that
Mm-hmm.
kind of thing. So I like him as well. But yeah, there's always I do a lot of reading, probably more than podcasts.
Mm-hmm.
I subscribe to like Northwestern Mutual, has a great chief economist, and he puts out some really good stuff. Um, as well as like I think it's called Globe Street, is like a commercial real estate outlet. So I read a lot of their stuff, and I try to look at not I try to look at kind of the global view of things, because
Mm-hmm.
we're in real estate primarily, right? So a lot of the real estate guys for years have been saying, oh, rates are going to be dropping, rates are going to be dropping, and I think that was more wishful thinking, because
Yes.
when I would look at resources outside of the real estate bubble, they were saying no, rates are not going to be going down anytime soon. And so
Mm-hmm.
that's kind of the viewpoint that we've been taking at Bellrose Storage Group, which is why we've been focusing so hard on our operations, because we can
Right.
control that. We can't control the interest rates, but
Yeah.
yeah, I try to look at those disparate resources, so I'm not just getting in an echo chamber of real estate people who are more into wishful thinking than actual data.
And it's very tempting to hang out with people who agree with you and will just feed into whatever
That's right.
fantasy. That's what we do. That's what we as humans
Yeah,
like to do.
that's
And
right.
then finally, how can people get in touch with you?
Sure. Yeah, this has been great, Ray. Again, my name's Tom Dunkel. I'm the Chief Investment Officer at Bellrose Storage Group. Uh, BELROSE storagegroup.com. And I'm also all over LinkedIn. We post a lot of my podcast interviews and other value add information. So if you Google me or look me up on LinkedIn, you can find us there. I would point your listeners, Ray, to go to our website, bellrosestoragegroup.com, because we do have a
Mm-hmm.
resource there that could be helpful for investors who are, maybe they're looking to get into alternative investments like multifamily,
Mm-hmm.
self-storage, short-term rentals, what have you. But it could be daunting. Like, where do you start? How do you
Yes.
take that step? So what I've taken over my 18 years of being a full-time investor, I've developed a resource, an ebook that we call the SAFE investing method. And
Hmm.
SAFE, of course, investing isn't safe, but SAFE is an acronym, which I'll just give it to you real quick. It's SAFE. So S stands for sponsor. So these are just questions that you should be asking the person running the deal. And so many investors skip right to the deal, and they don't really spend enough time looking at the operator and the sponsor, because
Yes.
that can really make or break a deal.
Right.
So ask a lot of questions. Of course, it's not an exhaustive list. It's just a list to, get you thinking. And then A is for asset. What is the asset that you're investing in? I'd love for, crypto investors out there to be able to tell, their mother or their young children, like, what it is they're investing in. I can explain to my 88-year-old mother, or my 19-year-old daughter pretty easily about self-storage,
Yes,
right?
yes,
And how that
right,
works. So it gives you a list of questions to ask about the asset, the market, what drives the value, et cetera. F is for financials. So look at the financials. What are the projections? What are the tax implications? Has the sponsor delivered these kinds of returns before, et cetera?
mm-hmm.
And then E finally is for exit. How do you get out of this thing? It's not
Yes,
it's not
yes,
like you can go to schwab.com and click and sell your position in a Bellrose Storage Group deal. It just doesn't work that way. So as
right,
an investor, you need to be going into these opportunities eyes wide open, understanding that your capital is going to be tied up for a period of time. And so
right,
what needs to happen for that exit to happen? Does the market need to shift up? These things are out of your control. So you just need to know what those factors are. So the ebook gives a list of questions about how to handle the exit. So it's a free resource on our website, and I hope it helps some investors out there, with their due diligence, so they can take that step. Because I think alternative investing is where it's at. You're able to build a great investment portfolio that's very
mm-hmm.
predictable, very steady, tax advantages, based in hard assets, with growth potential and cash flow. So I just, I'm on my soapbox here, Ray.
Yeah, yeah, yeah. Well, yeah, enjoy that soapbox. Yeah, fits you well. Fits you well. This is exciting. This is what this riff, especially towards the end, the whole conversation, but this riff, especially at the end, is why I enjoy listening to you when we go through the whole Raise Masters coaching calls and all that. I always enjoy the wisdom that you share in our calls, and our listeners today have enjoyed a taste of that too. So thank you for that, Tom. Tom Dunkel, it has been a pleasure having you here on the ROI Clear podcast, and I'll see you around Raise Masters.
Thanks, Ray. I appreciate you, buddy.
Thank you for engaging the ROI Clear podcast. At ROI Clear, we buy multifamily apartment properties, we improve them, and we give people a great place to live. At the same time, we give investors an opportunity to enjoy capital preservation, tax advantages, and a solid return on investment. If you'd like to know more, click the link to roiclear.com down below. We look forward to speaking with you.